in 10 minutes and I'm going to do analysis right now. So let me just go and do analysis of dollar index. Right, we are very much near the weekly high. That's where a lot of liquidity resides, and that's also a rejection block with long wicks, right? So yeah, that's a rejection block. I would take it as a rejection block. On the 4-hour time frame, well, yeah, there's a lot of wicks over there. Okay, coming over here. Not just that, but there are long wicks over here as well. So even though we're bullish, we are very much close to high time frame PD arrays. So we could expect a short setup to unfold itself, right? Going directly to the 15 minutes time frame. Okay, so buy side liquidity has been attacked. That's a rejection block. Okay, so I can expect the sell side liquidity being taken out after the news is released. So yeah, I'm expecting a short setup, right? And I would target this low. Fucking hell, my laptop is already heating. This low and this low, right? These are the lows that I will be targeting as my TP1 and TP2. Okay, let me just go and see what's up with the euro. Okay, holy moly, you can see that the buy side liquidity has been taken out over here. So if I'm bearish on dollar, I'm bullish on the I'm bullish on euro and pound, and even dollar, and even gold. Right? Gold is coming down. I'm guessing that it will come down to this area, which could also be a rejection block. Right, so let's see. I'm not trading gold today though, and that's a 5 minutes time, 1 minute time frame. Oh yeah, or it could come down. See, that's also a confluence of OTE, a bullish order block, right? So yeah. Okay. We already see market going up. Pound में, well, in pound, there's already sell side liquidity attacked, and then that's a free value gap left open. Maybe one could have entered right over there. One can enter right there with that being as the profit. But I'm not trading pound. I don't see a good setup over there, so I'm very much interested in euro. The profits will be taken. The profit target will be this high, and that's 16 pips. I'll take this high as the profit target. Okay. So So just for the sake of information, I'm not really taking any trades. This is just for my practice purposes. Let me see how dollar index is doing at the 5 minutes time frame. Okay, I want to see you go over there and then come back from this PD array. I'm seeing if there's a short term low. I want this to remain here, right? This short term low to remain there, and I want the price to go and make another lower low. So this short term high to remain there, and I want the price to go lower and make a lower low. Come back up, slam this short term high out, cause the market structure shift to happen, and then that's where I could have entered. That's where I can enter. Okay, so as long as there is no market structure shift, we will not enter a trade. As clear as it can get. I'll make sure that I'll see if I want to add a soft background music, just to make the video watching experience a bit more pleasant. I also want to monitor dollar index very closely, because as soon as there's a setup over there, I'll enter a trade in euro, a demo trade obviously. Three minutes left. The criteria for the trade is, sell side or buy side liquidity being taken out, which it already has. Then it's a market structure shift happening, which it hasn't done yet, and then entering the trade on a fair value gap, which is the 2022 model. Okay, so price going up, price is coming down. That's the market structure shift right there happening. The price is coming down. It's oh, holy moly. Okay, I like this. I like to see what's happening over here. Yeah. Okay. Yep. That's a fair value gap. Okay. I want to see there's another fair value gap right there. I want to see if the price comes there. Do you see it? That's a fair value gap right there. I want to see if the price comes there or not. $4 a.m. Let's see if the price goes down or not. It did. I like this shit and I want to see the price rally up. Yeah. That's the beauty of ICT. See, this area, this block right here is where I entered the trade. I mean, I haven't placed a demo trade right now, but yeah, that's where I would have entered. I'm just practicing right now. This is nothing but a way for me to document my own journey. I hope the price doesn't go and tax attacks my stop loss. But let's see. I have to be motionless. I have to be equanimous. I would have looked to exit with my partials from this top. No, actually this is a better target for my TP1. I'll just get rid of these lipsticks as ICT mentions them, which are no longer relevant. See, patience is the key. Patience is the key. Risk reward ratio is 3, well, almost 3. Let me just lock my screen and see what happens. I'm totally open to the idea that my stop loss could be hit. So yeah, let me just see if there's a favorable gap left open on the high time frame. What's up with dollar index? Okay, so yeah, we can see two setups over here as well. One and then two. I'll hit the gym after this news, or after the imaginary trade is completed. Also, I'm having a coffee right now, so enjoying my time. Let me see what gold is doing. Holy moly, bro. That's exactly where price came down and reacted off of. See. And what's up with pound? Holy shit. See, that's where I could have entered the trade. But, because that was not the asset that I was trading today. But I'm happy. I'm happy for the fact that my trade anticipation and, my ability to enter a trade and forecast the price with a lot more accuracy is increasing day by day. So yeah, well, it's a win for me. And just let the trade go by itself. I don't know why my laptop is heating a lot, but this thing will take time to and I'll upload these videos on a YouTube channel, which is nothing but a way for me to document myself and a way for me to access my videos no matter where I am, in the world. Yeah. Well, see, that's 18 pips target, and a stop loss is for 6 pips. See, the most difficult part that I found, excuse me with my English, but the most difficult part that I find about trading is, the patience that one needs to have. I mean, the problem that most of the people fall into, and which even I did in the beginning. I'm still a beginner, but yeah, you know what I mean. Which is that while I'm looking at the past data, right? When I'm looking at the past data to see how price reacted to it, I can just go within microseconds to see, oh yeah, that's how price went up and that's how price came down. But what we don't realize is that each candle in this case, you know, represents 5 minutes of price action. So while I'm looking back at price and saying that, oh, price came down and price went up, right? These two sentences just took me 1 second, right? So the entire period of observation is no more than 2 seconds. But while someone is actually sitting in a trade, each candle takes 5 minutes to form, right? So to sit and go through the process of let's just say if this was the trade that I would have picked this top and exited on this bottom, this is 15 minutes, right? And it only took me 1 second to see this price move over here. But to actually be able to sit for 15 minutes and see how price is moving, that's the most difficult part. And even ICT says that the kind of learning that we'll get on the daily time frame, on the price while it's actually moving in the live markets, that is something that we will not get by looking at price in the past or even by using the replay button, because the replay method or the replay feature in TradingView, it just it's nowhere close to how price moves in real markets. Like, it just prints the candles as it is, one at a time. So yeah. The amount of opportunities that $Dex has given to enter a new trade is insane. So that's one. Let me just zoom in. So that's 1, 2, 3, 4, 5. 6 opportunities to enter the same trade. Insane. See, even on the 4 minutes time frame, that's another entry. I went a bit too aggressive by entering on a price, by entering on even a lower time frame, which is the 1 minute time frame. But that's the power of patience. You need to be patient enough, right, for your setup to unfold, and then you can enter. Though the market structure shift only happened on the, but it happened on the 3 minutes time frame as well. See, that's where the market structure shift happened. The orange circle. Price went up, took out this short-term high, left the fair value gap opened. The same fair value gap which is there on the 4 minutes time frame. Price came down, and where we could have entered and where we entered. Let's just wait and watch what happens now. This line is TP1. I wouldn't be surprised if price comes and takes out these lows before it goes up, but I don't want it to do that. The only thing that is in my control are my emotions, and that's all I'm gonna focus on. Even if I do get stopped out, no worries. This is a pretty solid way for me to document my emotions, document my logic, and review myself as to how accurate I was with respect to my analysis. Even as time passes by, and I'll get better in trading. Looking back at these videos will be a great way for me to reflect back on the mistakes that I used to make and how I could have shortened the entire journey of learning how to trade. Right, so then I'll be putting these up on YouTube. "14 and a half minutes post news release." I don't know about anything else, but I think my commentatory skills are definitely going to get better. Let me just try to anticipate where else price can actually go. What we can see is one thing, that within this trading range, price went up into the short-term low and then touched it and came down. For the price to go back into it, was that equilibrium? Yeah, that's equilibrium. So price went up into equilibrium, touched this and came back. If this is the trading range and this is the equilibrium, this is a breaker, right? These are the fair value gaps. That's an order block. These are the old highs. So I'll be hitting deadlifts, inclined dumbbell press, hammer curls, rope, tricep single arm extensions, and I'll be doing ab wheels, and I'll also be training my neck today for the workout. Pretty solid workout right after the trade is completed. So one thing that ICT does pretty well is that it gives you logic behind your trade, and it gives you a reason why, if price is going down, why is it going down, and if price is going up, why is it going up, and what possible things it could be doing up or down, right? Which is either to grab liquidity or to attack liquidity. So it becomes relatively easier, in comparison to the retail logic, to improve your psychology. Because if you see price going down or up, that it's going up or down to grab more liquidity. So if price does go below these lows, I know, or the way I think, or the way I put myself, or the way I work on my psychology is by trying to tell myself that it's probably attacking the sell side liquidity below these lows, which makes it easier for me to stay in the trade and not panic. Let me see dollar index. Okay, so it's already gone up. Okay. See, it attacked these liquidity, the sell side liquidity below these lows. And now I want the price to go up, slam up. Or it could even go down, it could even go below this low. But now I want to see it go up, or else I'll get stopped out. What's dollar index up to, bro? Maybe I will get stopped out today. So as dollar is going up, euro is struggling to go down, but if dollar comes down even by a little bit, euro just rallies by a lot greater margin. Even on the 5 minutes time frame, that's the short term low. Maybe I am stopped out. नहीं अभी भी नहीं. So probably stop now. If I consider the the spread as well, I would have been stopped right here. No problem. We'll see if there's another trade that we can enter. But what we did not see is that this side liquidity was taken out. Price went below, came up into this favorable gap and then rallies. This is a setup that I missed. It's probably because of the preconceived notion that I bought on the table. Yeah, these equal highs were taken out, price went up. No problem. I guess it's time for me to go to the gym and hit weights.